Today, Binance lifts its pause on Bitcoin withdrawals amid heavy volumes. The DOJ reportedly investigates the world's largest crypto exchange for possible Russian sanctions violations. And Benedikt Schuppli of Obligate weighs in on MiCA's influence on the rest of the world when it comes to crypto regulation. Welcome to CNBC's Crypto World. I'm Pippa Stevens. A sell-off hitting digital currencies over the weekend, and Bitcoin is extending those losses this morning. By noon Eastern, the cryptocurrency fell to the $27,000 level, thanks in part to Binance reporting congestion on Bitcoin's network over the weekend. Ether also took a hit this morning, falling to $1,800, and Polygon's Matic token fell to 93 cents. Now, several meme tokens had rallies in recent days, but even those are tumbling back down as investors look to take profits. Okay, let's talk more about that traffic jam on Binance. The crypto exchange resumed Bitcoin withdrawals after a second pause over the weekend because of heavy volumes and rising processing fees. Yesterday, Binance tweeted it temporarily closed Bitcoin withdrawals due to the large volume of pending transactions. A little more than 2.5 hours later, Binance announced that Bitcoin withdrawals had resumed. Binance faced another pause for around 2 hours Sunday afternoon, and this morning, the crypto exchange tweeted that all pending Bitcoin withdrawal transactions have been processed. In the series of tweets, Binance wrote that its set fees did not anticipate the recent surge in Bitcoin network gas fees, and that it is replacing the pending Bitcoin withdrawal transactions with a higher fee so that they can get picked up by mining pools. Binance later tweeted that it had adjusted its fees to, quote, prevent a similar recurrence. Next, sticking with Binance, the Justice Department is reportedly investigating whether the exchange violated sanctions on Russia. According to Bloomberg, the DOJ is launching a probe to find out if Binance illegally let Russians move funds onto the exchange to avoid U.S. sanctions. At the onset of the Russian invasion of Ukraine more than a year ago, countries around the world cracked down on business with Russian citizens, and the EU implemented a sweeping ban on crypto services. Now, we reached out to Binance and the DOJ for comment, but didn't hear back right away. But the crypto exchange told Bloomberg that it had a zero-tolerance policy on double registrations, anonymous identities, and obscure sources of money. Last, Liechtenstein is gearing up to accept Bitcoin, at least for some government services. The country's Prime Minister Daniel Risch told German newspaper Handelsblatt, quote, a payment option for Bitcoin is coming, and that the country would accept Bitcoin deposits, which would then be converted into Swiss francs. Now, Risch didn't give a timeline for the new payment options rollout, but the move comes as governments across Europe look to regulate cryptocurrencies. And speaking of European crypto regulation, last month EU lawmakers approved the world's first comprehensive framework for regulation. So what has changed since then, and what does this mean for the US? For our main story, Crypto World's Mackenzie Sigalo spoke with Benedikt Schuppli, the co-founder and co-CEO of blockchain company Obligate, to find out.
So MiCA, it's the world's first comprehensive set of rules aimed at regulating the crypto industry. Can you walk us through some of the highlights?
Hi, Mac. Yeah, so it is certainly the first of its kind in terms of, a major economic zone like the European Union implementing this all across the European single market, which is, almost the size of the US economy. So MiCA, the markets in crypto assets regulation, implements rules for crypto asset service providers that can be, crypto exchanges, brokerage firms, as well as issuers of cryptocurrencies, so utility tokens, protocol tokens, and also stablecoin issuers.
Right, and that is a piece that I want to better understand. What is the significance outside the Eurozone of this first set of rules being rolled out?
Well, so I think, crypto has been around for a while now, right? So it's 2023. It's, been more than 10 years. And so different jurisdictions across the globe have already implemented regulations, found ways to deal with this new set of, virtual value transfer system. But I think MiCA will definitely change in that it's harmonized across, the European Union with more than 500 million people. It's one of the most important markets for crypto. And I think, like we've seen with the data protection regulation, GDPR, that was implemented in the European Union a few years ago, it will potentially also set a standard for other markets to follow suit, especially if you're, let's say, a large, company, a Web2 company in California. The European single market is so important for you. You're going to have to comply with that in order to maintain your access. I think it's going to be actually the same with MiCA for crypto asset service providers.
And I definitely want to dig more into that, especially given the conversation that's happening here in the US around regulation and this kind of almost competition happening between different federal regulators in terms of who owns a space in terms of overseeing the industry. But before we get to that, one part of MiCA that I'm especially interested in has to do with stablecoin regulation. Now, it seems as though there are obviously certain reserve requirements, but there's also these daily limits of, I think, around $220 million for some of the US dollar peg stablecoins. And I have a couple questions about this. Is this a headwind to US dollar dominance? Is it singling out US dollar pegged stablecoins versus Euro pegged stablecoins? What's the thinking here?
So I can honestly only surmise what the thinking is behind here. So first of all, I think it's just certainly a tool to make sure that the payment rails are still dominated by the traditional financial institutions, whether it's the central banks themselves or the commercial banks in their role, in money creation and money transfer. And so I don't know if it's actually, there's this geopolitical angle to it. And I think also it has to do regulators. Sometimes, they're also just very much overwhelmed by what's happening. We see stable coins like Tether with, I think almost 80 billion in market cap. We see USDC falling down to 30 billion. These are very sizable economies that are built on chain. And I think regulators sometimes, they also just want to, I guess, slow innovation a little bit by, introducing these limitations. And I think for the EU must also be said, there's a difference between stablecoins, which are, backed by actual fiat money. And you already had a regulatory framework for this. It's a long time, and it's called electronic money. So now they're just implementing additional set of rules for electronic money, which is in the form of blockchain-based tokens. So this would apply, to Circle and others like them.
I mean, is this problematic? You mentioned Tether with a market cap of around $80 billion, and if they're capped at $220 million in daily transaction volume, across the entire European Union, is that going to be an issue?
I mean, I think this will really start making then carving a wedge between those who want to comply, those who are regulated companies, really with the intentions to conform with regulations across the globe, like Circle. They just announced they're going to set up shop in France, and those on the other side, like Tether. I mean, Tether is not regulated. It's immensely popular, but there is a huge risk associated with these types of assets. And I think this will definitely have a huge impact on these providers, as it relates to European Union. So it will be difficult for also service providers, to keep dealing with Tether, in my opinion.
Okay, so I want to broaden this out and talk about MiCA, in the wider context of, the U.S. still not having any sort of hard and fast rules when it comes to regulation. We've been waiting for one of these bills on Capitol Hill to be passed so that we get marching orders from lawmakers with respect to whether the CFTC or the SEC, has some sort of jurisdiction over the space, or if they're splitting and, dividing and conquering in terms of their duties with respect to regulation. So I guess the question is, I mean, does this make the EU a more ideal jurisdiction? Like you said, a lot of these crypto firms are hungry for just clear rules from lawmakers, and that's something that is now offered through MiCA. Is this a massive headwind for the US?
I personally think absolutely. If we look at the Web2 dominance of the US, I think the EU certainly has missed out on a lot of that. I think, most of the, largest companies in the world currently are, in the US and have profited from this Web2 boom. And for Web3, so, Europe has always played quite a vital role. So a number of the largest protocol foundations have already been set up in Europe, not the European Union, mostly in Switzerland. So it will definitely have an impact. And I think for those players in the current state of the market, so let's say, we reach the utility phase of the technology. So those who want to provide services that have a benefit for consumers and are less focused on, let's say, speculation and all of that, regulation has a benefit because you know what you can do and what you can't do. And the worst thing, being an entrepreneur or builder in this space really is the unclarity, the uncertainty that you've had in the US for such a long time. And I think, we need to take these words of admonition seriously, when they come from people like Brian Armstrong, who have built, huge businesses in the US. I think Coinbase almost has, almost like 100 million customers in the US alone. And so this is sizable. And if they say, we're a public company, we've been listed, we've gone through a lot of processes to get there, and still we do not, get any words of, clarity towards what we can do and what we can't do. All the more we actually get enforcement actions taken against us. There's a lot of reasons to say, well, we're considering setting up shop elsewhere.
Okay, that's all for Crypto World today. But if you're looking for more crypto coverage, you can find all of our full conversations with banking and investment experts from Digital Assets Week in San Francisco over at cnbc.com/cryptoworld. We will be back again tomorrow, and we'll see you then.